Okay. Hello everyone, and welcome to this morning's webinar, and thank you very much for taking the time out to come and join us. But as always, before we start, may I draw your attention to the disclaimer that I know you can see on the screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And just very quickly, for the benefit of those of you who may be coming along for the first time, we'll be looking at the charts, obviously the live charts, the Forex charts, through the prism of volume price analysis. It's where we look at price action and volume to see not only whether the what we're seeing in terms of the price action, is it a valid move, and the only indicator that tells us that is volume. I've actually got a nice annotation from yesterday on the pound Aussie, which is actually on my Facebook page, my Learn Forex Facebook page, because I thought it was just a fantastic example of VPA. I think there were 2 or 3 VPA lessons on there. But of course, we will actually be looking at the development of VPA in the live markets as well. With the Forex market, obviously, we look at technical analysis. As I said, we look price action and volume, but we also look at what's happening on the fundamental side, what news is going to be driving the currencies and currency pairs. But we have a third element, and that is what we call the related markets. And the related markets are those markets which have a relationship with individual currencies and currency pairs. I mean, nothing moves in a vacuum. That's what I'm trying to say. There are 4 capital markets. There's the Forex, the bonds, the commodities, and equities, and they all have relationships in themselves and between them. And when we started, not a lot of people, in fact, very few people ever talked about the related markets, even fundamental news. It was really much just everything, was the chart and price action. Certainly no volume, but you can't read a piece of analysis these days that doesn't tie what is happening in one market with what is happening in another. What we've also done, David and I, is we then moved it on and developed some very particular indicators to help us with the Forex market, because what we're looking for in Forex, we are looking to track the flows into the individual currencies. The Forex market it's the quickest market to react to news. That's fundamental news, geopolitical news. You will find, if something cataclysmic happens, there is a wholesale stampede into those currencies which represent safe haven. Now, that could be the dollar, that could be the Japanese yen, it could be the Swiss franc. And when markets are not worried, in fact, they're prepared to take on more risk, you will find those currencies, those individual currencies, will be sold. And then, you have to pair the flows that are going into one currency with flows that are going into another. So we've developed the indicators. As I said, these currency strength tells us where the individual flows are going to. Is the market buying yen? Is it buying pound, etc., etc.? Then we've paired it up to give us if you like, a ranking table of the strongest pairs. And by the strongest pairs, I mean where we have the strongest flows into one of the currencies. So, for example, in this one here, we've got the Swiss yen, and there was a lot of buying in the Swiss and selling of the yen. It just makes life a lot easier, and also helps with picking up potential trading opportunities, but also help us to monitor and track when we are in a position. We've also got the currency array, which looks at the strength of trend, and then we've got the currency heat map, which looks at all the pairs in multiple timeframes. But as always, it's much easier if we actually see things on the charts. Now, I've got MT4-5. I'm actually going to be, I think I'm going to focus a little bit more on MT4. And actually, I've got MT5 today. I haven't got my MT4 up, because last week we had someone come along and for some, it was not planned, I assure you. Both of us tended to have our NinjaTrader up more than MetaTrader 4 and 5. This is MT5. I use it because it has a number of advantages. One of them is you get a lot more time frames that you have on MT4, as we can see down here. It doesn't have seconds charts, but it has more time frames up to the month. And also, I know MT4 brokers offer it as well, but it does have an awful lot of other instruments. It's got stocks, it's got access to the indices, and VPA, volume price analysis, you can apply to any chart, basically. The symbol on the top left-hand corner, the ticker, is kind of almost irrelevant because the lessons that are on, the way the methodology works, it works across the markets and in all time frames. So before we start, a very quick look at what is coming up ahead and where we are in terms of sentiment. What I normally do is I hop over to investing.com. And we recommend this site to, in fact, to all our Forex program students because it's free. Secondly, I think it has practically a chart for every single market instrument that is out there. It's got the volatility indices, it's got the bond spreads, it's got commodities. I mean, I go on and on and on, but it's really my first port of call in the morning because you just go onto their landing page. I've got the .com version, and I look and see, okay, what are the futures doing? This is the one for the Dow, this is the one for the S&P 500. I've got the NASDAQ on a separate one. For some reason it doesn't appear on my list there. And I noticed after yesterday's extraordinary performance by all three, there's actually been a bit of a pullback. Fine, a quick look at what the headlines are pretty good on here, and it just gives us a flavour of what what kind of market condition am I venturing into at this particular time. Obviously then we've got Forex Factory, and that was yesterday. What have we had today? Well, overnight it's been quite interesting because we've had Chinese data, the trade balance, and what that has come up is, in fact, China runs a surplus. So this, when you see this as a positive number, it means that the country in question exports more than it imports. And China, like Germany, is obviously a huge exporter. And usually it's, these numbers are fairly, fairly comfortable, as it were, for the economy. This has come in a lot, there's been quite a miss on that, which tells you that obviously the export market has not been performing as strongly as it has been, quite understandably, given what we're going through at the moment. But I think the market's sort of quite surprised about that. What have we had? We've had the US denominated one. That's fine. That's just a derivative of it. But just look at this number here. When this is negative, you will know that that particular economy is obviously importing much more than it's exporting. What have we got coming up? Well, we've got some, I think we've had the unemployment data here. We've had the unemployment rate slightly higher. There we are. What else is coming? We've got the ZEW, etc., etc. So we kind of know what's coming up ahead. I also use this this news feed as well. It's something we suggest our students take. There is a free version. I've got the pro version. It just means the news comes out instantly. It's not delayed in any way. And I like to look at the calendar because Forex Factory, it's great. Investing.com have a nice calendar, but unless you've got a Bloomberg or a Reuters terminal, not all the calendars that are certainly available for independent traders, sometimes they miss things and what have you. So it's just nice to have more than one. And Financial Juice kind of sort of sits between the two, if you like. I don't think it's very expensive. You'd have to go and check it out, or you have the slightly a delayed one. It really does depend. The advantage, the reason for having a live one is that if you are scalping, if you are on the very fast time frames, when the news is going to impact potentially what is on your chart, then it may be worth investing in a calendar that delivers the news instantly rather than on any delay. Right. Generally speaking, on the markets, this is I'll cover it more in this afternoon's webinar. October. we're obviously in October. October is one of these months that has a bit of a rep in terms of traders and investors that sort of shudder a little bit and think, oh, October, terrible time for the markets. Statistically speaking, it isn't actually. I think September is when markets have actually pulled back, but October has its claim to fame is that it's the month where we had two of possibly the worst economic crashes ever. One is the 1929 crash, and the other one is 1987. So it's kind of seared into the unconscious of traders and investors. So are we going to see something this month? I think so. I think there are so many things out there at the moment, and probably things that we haven't even thought of. And I've actually said that is there a black swan out there? There may be more than one, but the laundry list, the election, the virus, obviously clearly coming back as part of a second wave. Whether it's going to be as lethal as March, we will wait and see. But given the what it's done to the economies, things are not looking good at the moment. And in a way, if you look at the graph of the virus, it's pretty much. I know this is presented in this way. It's almost like a chart. It is a chart. It is, and you can read it like a chart. So we just have to hope that it doesn't last long. And it starts to go away. I think looking at it in this way, it seems to be certainly going to be around in the next few weeks, certainly till the end of the month, and hopefully it will start dying down by November. What it leaves in its wake, we don't know. All I know is I think I found a thing yesterday from Great Western Hotels. They've got 56,000 hotels in just the States alone, and the CEO has said that they think 38,000 of them, 38,000 are going to have to close within 6 months if they don't get any more, help with keeping the business afloat. And if you think about it, if they do close 38,000 hotels, the number of jobs that is going to impact, it really isn't, it's not a good time at the moment for very, very many people. So the stimulus or the lack of, we'll see what happens. That's obviously tied with what's going on in the election. And over here, of course, we've got Brexit. How can we forget? There's supposed to be is a deadline this Thursday, David, the 15th. It's all going terribly quiet at the moment. Looks absolutely, and as I said, the black swan, October has it does have this ability to surprise. So as I said, and the reason is that it's talked of in hushed terms by the trading and investing communities. As it says, it has this association with the great crash of 1929 and 1987. Right, let's have a look what's happening. Now, my trade yesterday was on the pound Aussie. It was a bit of a funny day yesterday. It was Columbus Day, all sorts of things, strange things happening on the indices in the terms of, price sort of going higher, but I don't think the volume was all that clever. But the pound Aussie can always be relied on to come up with something a little bit special. And as always, what happened with the move? The move started off the volume point of control, which is an indicator that we have developed. It's based on a combination of volume at price and also elements of market profile. When we look at volume, we look at volume in obviously what we call the activity volume down here, which represents the kind of buying and selling. But we also look at volume and price over time, because what happens on a chart, when you look at a chart, there's obviously a structure to the chart, and what we need to try and establish as traders, we try and look for those points in the chart where the price, if you like, is in what's called fair value. In other words, it's really not going anywhere. There's no bias. There's no strong bias either to the top, to the bull side or the bear side. And what we wanted was an indicator that would actually tell us where on that chart that area was, was at that particular at this particular time. And so we came up with what we call the volume point of control. And it's really important because if you look at charts, for as long as we've done, you will find that price spends an awful long time in congestion phases, in consolidation phases. It's waiting. The market is always waiting for something. It's either waiting for a piece of news. Oh, by the way, talking about news, we've got earnings season this week as well. Lord knows what that's going to do to the market. So, you know, that's something else we have to factor in. So this is what this indicator does. So it tells us, A, that we are in consolidation, B, we don't have a firm bias in one direction or the other. And the longer the price stays in a consolidation phase, then when we do get the breakout, it is going to be fairly explosive. This is part of one of Wyckoff's law, which is the second law of cause and effect. And this is what we talk about in very great detail in the Forex program. One of the questions I'm asked about the Forex program, say, well, all the books on Amazon, can I just use the books to help me trade and, you know, make a success? And I say, absolutely. You can use the books that are on Amazon, incorporate VPA and the concepts that make up VPA into your existing strategy, or if you're a newbie, you get to know VPA and then you build on it, as it were. So, you know, why should I invest in the program? And the reason for investing in the program is that it really goes into not the VPA side. It looks at the work of Richard Wyckoff and takes it into, goes into quite in a very forensic kind of way, and as I said, and and explains in great detail about trends, what to look for when the price has broken away and is in a trend. And this screenshot actually explains it in detail. So we had here. We have this this congestion. If you look at the timestamp under here, this is the other reason for Ninja. This is all in real time. What tends to happen is, as we come up to these crossover sessions, we're waiting for the US session. Now, yesterday US session was a bit because of Columbus Day. Some markets, the futures were certainly open, but the cash markets weren't. But anyway, moving into, we've got 3:30. That's when the sort of 1 o'clock. 1:30, that's when the Forex people get going, and then 2:30 is when the cash markets are. So we have this congestion. Then we have the break higher, reasonable volume underneath it. Then we get a weak candle. Why? Because it's got a wick to the top of the candle, and you think, oh, great, that's going to be, is it a fake breakaway? Because it also hits this important hits a price-based resistance in terms of the Camarilla, and also the resistance that we see here on the chart, which is from the accumulation and distribution. And it puts in a reversal, and we see this down candle come in. Now you think, oh, that's it, another fake breakout, as it were. But if you look at the volume underneath there, I know I've put the arrow over it. Look at that volume and look at the size of, look at the size of that candle. It really is anomalous. So that signal tells you that, okay, there has been a reversal, but it's only a minor pullback. Without that, you wouldn't know. A lot of traders, price-based, price action traders, would see that as a fake and say, great. They don't necessarily trade that because breakouts don't have a very good rep amongst traders. They see that the candle, it's a great candle, a shooting star type candle. They would go short. Yes, you would get perhaps a few pips in there, and then it reverses back up. And it's only the volume that will tell you whether that is a valid price move or not. Then we get a lot of volume come in again on this candle and blow me down back to the R5, and then we suddenly get, oh right, 3 candles coming. Now the volume underneath it is all fairly consistent. We think, well, it's reasonable amount of volume, but the difference is this: when you start getting a move in candles, either to the downside or the upside, you need to see that rising. If it's not rising, then again, it is probably not going to go very far. Those 3, so if you like, as I said, there is no increase in selling pressure. They're all fairly, they're all fairly regular. That is all fairly regular. But if you wanted to see that, gain some momentum, you would need to see that, these here, these three sticks, if you like, these three bars down here, you would have to see an increase. We don't, and then we actually get the push away. It comes into a bit of support on the volume point of control here. There is actually a little support line as well, and that's what we want to see. We want to see the volume rising. It goes up and up and up, and we go higher and higher. But then we get another anomaly, and it's the most glaring anomaly that we can see on this chart. We have this massive up candle we see, and look what we have here. So we have the move, but it is running out of steam, and that is, and again, for price, I think for price action, traders who only use price action, they see this lovely move. Oh, nice big wide spread up candle, must be going higher, because there's nothing to tell you that it isn't going to go any higher. But look at that. Look at that compared with that. That is, I think it's, David, would you agree that's probably the most glaring anomaly you've ever seen? Because certainly it's one of them. And then we know that there is going to be a pullback. Why? Because we actually do get a weak candle, and we do get the reversal coming into, this is around about the London fix. But that was the pound Aussie, and as I said, it's I just wanted to show that because it's not easy to show these lessons in the live market unless we go on to, I know David has the 15-second charts, which is why we use the fast charts to try and show you what is actually going on. Now I'm going to go back to the CSI on the hour. What's been happening? Well, we had a bit of a fall on the Aussie, possibly responding to the Chinese news. It's all a bit, and I think also there was a confidence piece of news to do with the Aussie. But essentially, the Aussie is very oversold, looks like overbought, oversold. It looks like it's wanting to rise. What's happening up here? We've got a sell on. Are you looking at the pound at the moment, David? Yeah. On the pound. So what I'm going to do is I'm going to look at some of the pairs on MT5. You'll come back to me in a second. I'm going to move over to David because he's actually been, what have you been looking at? Something interesting over there? Oh, we've got cable. Oh, well, he's got cable. There we are. So I'll move you over to David. If you've got any questions, please just put them into the chat box on anything that I've said. We'll either answer them on air or I'll answer them in the box.